Here's what every business owner should be thinking about in August. So we're pulling together a series of things that you should be considering and giving you one focus per month throughout the year. In August, what we're looking at is reviewing your debtors, the people who owe you money, and creditors, the money you owe out, and the terms you have around those to ensure you optimize your cash flow position. So the first one is debtors. Debtors is money owed to you as a business. So you've completed a piece of work, you've invoiced for it, and then they owe you the money. So what are the terms of the payment for that essentially? So key things you can be doing as a business owner is one, setting up automated chasers. So within most accounting softwares like Xero, for example, this is already built in. So as long as your bookkeeping's up to date, you can get the debt chased automatically and set the terms so what dates you want to be chasing those invoices. I'm a big believer that there's two types of debtors, those who physically can't pay, and you should have an understanding of which of your clients fall into that category. You can do things like credit score reviews and stuff like that, but you can get an understanding that that business is generally struggling and that's the reason why they're not paying, and then you have a commercial decision to make off the back of that. Should you still be doing work for them? And then I think the other side, which covers more business owners, is how easy it is to pay. So key things you can do from that perspective are making sure your clients are on direct debits. So we Gravitate, and we sign up a client, they automatically sign up for a Go Cardless link, which essentially means we'll raise an invoice and Go Cardless will collect it as per the agreed terms with that client. So from their perspective, they don't have to log on, they don't have to type in our bank details, risk the transposition error of taking the number off the screen and typing it into the system. It's dead easy, it's simple. The other point to that is making sure you've got a quick way of getting paid. So things like Google Pay or like one-click solutions, just making it easy for your clients to pay your bills. The other top tips you can be doing with your debtors. So regular debtor reviews, like say, understand your clients and what the problems is and pick up the phone and have that conversation with them because you need to understand their situation. You can segment your debtors. So using Xero, there's various ways of cutting up your age debtor schedule. You could have clients who are on direct debits, for example, so you know that money's going to come in. The typical bad payers, segregate them out and have a method of chasing them up whereby it's potentially more forceful and aggressive because you know in the past they've been bad at paying. So again, create more chasers, for example, and various other ways of cutting that information up. Another option is incentivizing early payment. So if a client pays within the first 3 to 5 days, could you give them a 5% deduction as an example? Because like I say, for you, getting that cash in quickly means you can reinvest it and make more money with it versus waiting 30, 60, 90 days, then having to chase it and the time costs involved in that. So yeah, sometimes offering a small discount to get that money in earlier can really help you in your business. The final solution is legal and not being afraid to have that up your sleeve, something you're willing to do to get that money in, because at the end of the day, you've stuck to your side of the deal and you're owed that money. So using the support of a legal team to help accelerate getting that money in if they're significantly past payment terms is a sensible move. And then when it comes to your creditors, so the creditors are the money that you owe out due to your customers. Obviously, some of it's going to be the reverse of what we discussed. Like if you're cash rich, are you willing to pay your suppliers earlier and try and negotiate a deal off the back of that? Again, you've got the cash in the bank, so why not pay them? It keeps them sweet. And also if you can get a small saving out of it as well, then it's a win-win. Again, we actively encourage when you've got monthly payments, setting up those direct debits. It just saves our finance manager the time of having to log on and make those payments each month. Every opportunity you get, try and push towards automating those payments from your side as well. The final option, if you aren't cash rich and you've got debtors that are on longer terms, start having those same conversations with your suppliers and look to negotiate longer payment terms. The key thing there is if they're aligned similar to your invoicing terms, then it will help manage your cash flow, because the last thing you want to be doing is selling something that's paid on 90 days and you've got a significant cost to suffer to deliver that work, a cost of sale, and they're wanting it to be paid on 30 days. Even if you're a mega successful business, you're going to have that significant cash gap that you're going to have to fill. Certainly something to be aware of. So that's a focus on debtors, so money owed to you, and creditors, so payables from your business, and just something to consider. Like you say, there's a lot going on in businesses, but if we can try and break it down month by month and give you a little focus just to take a step back and look at within your business, hopefully it can help.